Liability insurance. This is the most basic and most required form of car insurance in nearly every country. It does not cover your own car or your own injuries. Instead, it pays for the damage you cause to other people and their property when you are at fault in an accident. There are two parts to it. Bodily injury liability covers the medical bills, lost wages, and legal fees of the other person. Property damage liability covers repairs to their vehicle, their fence, their mailbox, or whatever else you hit. Almost every state in the United States legally requires drivers to carry a minimum amount of liability coverage, and the minimums vary widely. In some places, carrying only the legal minimum leaves you dangerously underprotected because a serious accident can easily produce costs far beyond those limits. Whatever the law does not cover, you pay out of your own pocket. Collision insurance. This one covers damage to your own vehicle when it collides with another car or object, regardless of who caused the accident. If you rear-end someone at a stoplight, liability insurance pays for their car. Collision insurance pays for yours. It also applies if you hit a guardrail, a pole, or roll your car into a ditch. Most collision policies come with a deductible, which is the amount you agree to pay before the insurance company covers the rest. A higher deductible means a lower monthly premium, and a lower deductible means a higher premium. Collision coverage is not legally required anywhere, but if you're financing or leasing a car, the lender will almost certainly require you to carry it until the loan is paid off. Comprehensive insurance. This covers damage to your car from events that are not collisions. The list is long: theft, vandalism, falling trees, hailstorms, floods, fires, hitting a deer, a rock cracking your windshield. Essentially, if something happens to your car and it was not caused by crashing into another vehicle or object, comprehensive is the policy that steps in. It is sometimes called other than collision coverage for exactly that reason. Like collision insurance, it comes with a deductible and is not legally mandated, but lenders and leasing companies almost always require it. In areas prone to severe weather or high vehicle theft rates, comprehensive coverage becomes especially valuable even for cars that are fully paid off. Uninsured motorist coverage. This protects you when the other driver is at fault, but has no insurance at all. It sounds like something that should not happen very often, but studies estimate that roughly 1 in 8 drivers on American roads is completely uninsured. If one of them runs a red light and totals your car, their lack of coverage becomes your problem unless you carry this policy. Uninsured motorist coverage pays for your medical expenses and, in some versions, your vehicle damage as well. There's a closely related version called underinsured motorist coverage, which activates when the at-fault driver does have insurance, but not enough of it to cover the full cost of the damage they caused. Some states bundle both into a single policy. Others sell them separately. A handful of states require drivers to carry uninsured motorist coverage by law. Personal injury protection, often called PIP. This is sometimes referred to as no-fault insurance. It covers medical expenses for you and your passengers after an accident, regardless of who caused it. That distinction matters. With most other types of coverage, someone has to be found at fault before money changes hands. PIP skips that step entirely. It typically covers hospital visits, surgery, rehabilitation, and in many cases, lost income and even funeral costs. Around a dozen states in the U.S. operate under a no-fault insurance system where PIP is mandatory, and drivers are generally expected to rely on their own PIP coverage first before pursuing a claim against the other driver. The idea behind it was to reduce the number of lawsuits clogging up courts after minor accidents. Medical payments coverage. This is similar to PIP, but simpler and more limited. Often shortened to MedPay, it covers medical bills for you and your passengers after an accident, no matter who was at fault. It does not cover lost wages, funeral expenses, or anything beyond direct medical costs, and it also tends to have lower coverage limits than PIP. In states where PIP is not required or not available, MedPay serves as the next best option for making sure your own medical bills are handled quickly.
One useful detail about MedPay is that it often covers you even if you're injured as a pedestrian or while riding in someone else's car. Gap insurance. This exists to solve a very specific and surprisingly common problem. When you drive a new car off the lot, its value drops immediately. If your car is totaled or stolen within the first few years of ownership, the insurance company pays you the current market value of the car, not what you originally paid for it. If you still owe more on the loan than the car is currently worth, you're left paying the difference out of pocket. Gap insurance covers that difference. The name stands for Guaranteed Asset Protection. It's most commonly purchased alongside a new car loan or lease, especially for vehicles that depreciate quickly. Once you've paid down enough of the loan that you owe less than the car is worth, gap insurance is no longer necessary. Rental reimbursement coverage. This pays for a rental car while your vehicle is being repaired after a covered accident. Without it, you're responsible for arranging and paying for your own transportation during the days or weeks your car sits in a repair shop. Most policies set a daily dollar limit and a maximum total payout per claim. The daily limit usually falls somewhere between $30 and $50, which is enough to cover a basic rental in most areas. It's one of the cheapest add-ons available on a car insurance policy, often costing only a few dollars per month, but most people don't realize they don't have it until the moment they need it.